Good morning. Welcome to Market Day Report, and welcome to a Thursday. Thursdays usually begin with the weekly export sales report, but you throw in that banking holiday to start the week, and it pushes that report to Friday. We will talk exports in just a moment with our next guest, but first, overnight trade of corn. How about in the red? Down a penny 3/4 on the D's at 4.03 a bushel, and the July down 2.5, 431.5. We are, however, holding that $4 range in the corn market. Something we're not doing for beans is holding $10 as November slips 9.73 a bushel in the overnight session. Now, the overnight session for wheat actually mixed. December Chicago down 2 3/4, 5.82 1/4. July down 3, 6.18. What about hard red? That's again front month December down 2.5, 5.86 1/4. New crop 6.17 1/4, off 3 3/4 cents. It was spring wheat in Minneapolis that we saw December gain a penny 1/4, 6.22. Did not see that kind of a gain for the cotton market as it's threatening to drop below 70 cents again, 70.28, down 98 points in the overnight session. Well, speaking of overnight, we get a flash sales report. Exports is what we're talking about with Brian Hoops, President, Midwest Market Solutions. Okay, Brian, good morning, and tell us about exports this morning.
Hey, good morning, Tony. So, yeah, we had a couple sales this morning, much smaller than yesterday's sales. In fact, yesterday when we talked, it was 1.623 million tons of corn. That was the fourth largest private sale ever in history. Much smaller this morning. It was 197,000 corn to Mexico, and then another sale of 101,000 metric tons of corn to an unknown destination. So, good to see more sales coming in. Yesterday, we saw a little bit of a bounce, really couldn't build off of it as we traded lower overnight. And we're still holding technical support right around 401 in the December corn. That's the number really to keep in mind by the closing bell. Can we sustain that, or do we close below it? Obviously, in soybeans, we closed below our soybean technical support, traded below it, tried to rally back and test that old support as resistance, and failed, turning lower again yesterday, following through overnight. And so, there was a lot of people talking about the lows are in for harvest for soybeans. We're just 10 cents away from testing those harvest lows once again, and I don't think they're in. I think they're going to eventually be taken out, maybe not today, but at some point we're going to take out those lows. We just have too much supply to deal with here in the United States. Over 480 million bushels more soybeans to work with than we did a year ago. And South America is growing a much, much, much bigger crop than what they did last year. And if they do have that big supply of crop, we're going to be awash in soybeans this year. And we're going to see prices, I think, much lower than what we're seeing today. So, producers that have not done anything or have not sold crop, there's still time, there's still opportunities. There's a lot of downside risk here. You can, eliminate or reduce some of that risk by managing it with making cash sales, buying limited risk call options, a lot of things you can do to protect yourself. And really, you really need to be doing that, especially in the case of soybeans.
Brian, we've really focused on corn and soybeans there, with Brazil being the #1 competitor, but now it's also cotton and one we don't trade, but sorghum, as it appears Brazil is ready to become the #1 sorghum exporting country. That's just more down the road for us to consider. How about we take a break, though, and we'll come back and we'll talk livestock futures. Is it a little more positive on that side? We'll find out. Market Day Report continues in a moment. It's Market Day Report. We're glad you're with us here on a Thursday morning. Grab a cup of coffee. It should be an interesting morning of trade. And we've got an export sales report set to come out tomorrow. Usually comes out on Thursday, but the holiday shortened week for the banking holiday and government holiday on Monday pushes it to Friday. Speaking of Friday, we're a week away from cattle on feed. And speaking of cattle, let's look at how live cattle finished the session yesterday. Front month October up 32, 7 cents higher on the December, most active at 186.60. And for the feeders, it was a 42-cent loss on the October, 246.10, 97 lower on most active November at 245.50. And what about the hog trade? Just a bit higher. Well, other than the December, which went much higher, up $2.47, 77.70. And again, I keep watching those May and June contracts continue to strengthen as well. And all that happening during National Pork Month. Let's bring back in Brian Hoops. Midwest Market Solutions, what are you watching?
Yeah, look at that hog market go. We talked yesterday morning how that is a technically traded market, and we were sitting on technical support on after Wednesday's trade, and how the market likely to bounce off of it. And once we took out Wednesday's highs, we were off to the races, seeing those big gains as a lot of buy stops were hit. We're still discount to the lean hog index with October off the board. December needs to narrow that spread. So there's a fundamental to watch for. As futures should go up into that low $80 mark to kind of narrow things up. But you look at the cattle market, still no cash cattle trade. We don't expect to see much in the way today. Maybe tomorrow we'll start to see some trade break loose. But packer margins, they are now about $59 ahead on the positive side. So they will have to spend some of that margin that they have to get some cattle bought this week. We're looking at probably at least $1 to $2 higher. We're hearing offers out in the country, 189 to 190. That's where the show lists are priced. Likely to see at least $1, maybe $2 higher cash trade. Cash cutout values were mostly higher yesterday. So all this is working in the favor of the feedlots to see higher money this week. And I think we will eventually see that. We saw 6 new deliveries against October futures yesterday after the close. So there was 10 that came back with $1 demands on them. 10 more were demanded with another dollar. So we're seeing, these deliveries coming in here with some demands on it and some new deliveries popping up. So likely to see the futures market kind of react in a positive fashion, I think, today, at least here initially until we get that cash trade rolling.
All great insight, Brian. Thanks again for joining us this morning. We'll see you back here in the morning. Brian Hoops, Midwest Market Solutions.